Hello everyone. Today I wanted to share with you what is the 4 M's of investment. When you start thinking about investing on a stock market or owning a share of a company, you have to really dig in deep and study this 4 M's, which is meaning, moat, management, and margin of safety. I'm going to explain this in details. By the end of this video, you should be able to understand why you want to own a company, of a share of a company, or you wanted to invest on that company stock. Let's get to it. When Ben Graham introduced value investing years ago, and Warren Buffett implemented that strategy for a long time and proved to the world that is the best way of investing. Now a lot of hedge fund managers and also money managers and investors been following these simple steps, 4 M's of investing. So these are the 4 steps. Number 1 is meaning. Number 2 is moat. Number 3 is management. And number 4 is margin of safety. When we talk about these 4 things, I'm going to get into it in detail so you will have a better understanding what I'm talking about. So that way, when you start owning a company of shares, it will be as the same as if you had an opportunity of owning the whole company. You will ask yourself, is it that will give you a clarity to yourself if it's going to be worth it to invest on that company or not. So let's get to it. Number 1 is meaning. When they say meaning, they're talking about not just the meaning of the product. What does it mean to you as an individual? That company's product, how does that relate to you, and how much of that you understand? So for example, if you are investing on Apple on a telephone, you understand what Apple stands for and what Apple is making is very easy to understand, right? So that's how you should understand for everything. Like if you're investing on Microsoft, you know Microsoft are making software every company is using in the world. So that's the kind of meaning you should understand. Whether if it's Coca-Cola, you know everywhere in the world, everyone knows about Coca-Cola. So number 2, moat. When they say what it means with moat, the direct meaning of moat is like if you have a castle and around it, if it's water surrounding it, it would be hard for someone to attack that castle. That's the direct meaning of the moat means. So when a company has a moat, which means like if, for example, we're talking about the same thing with Microsoft, it will be very hard for someone to create a new operating system and try to convert all those customers, client of Microsoft, to switch to totally something new, because that means the companies have to really train again, figure out, change their machines. There is a lot of moving parts involved. So because of that, Microsoft have a big moat when it comes to products and its company. So that's how the moat means. Like if you're talking about Coca-Cola is known worldwide. Everybody loves it, they enjoy it and all that stuff. So with that, when you think about investing totally, if a company comes up and say, all right, I'm going to compete with Coke, then it will be, you understand, it's going to be very hard for that new company to come and compete, because the strong moat Coca-Cola has. That's what the moat stands for. That's number 2. Number 3 is management. Management is very important. How is the CEO treats the company? Is the CEO and also its management of that company has a very good value? And is that value of theirs comparing with your value? How does that line up? So when you look into the management, you need to understand what kind of management they have in place. So when you're doing a research on a company to invest, always good to understand who is the leading person of that company and the rest of management. How are they treating their employees? How they working with the world? How they working with the politicians? All that stuff. What's the relationship with investors? All that will be available now with the technology on Google. You should be able to find out all the information you need pretty much for every CEO of the company, especially if the company is traded on the market. Most of the CEOs are public information. Anything you want to know about how and what they do, what they've been doing, what was their track for the past years, so that way you will understand who you're investing on, what company, and what is the future of that company, what kind of vision that person has. Because Steve Jobs was one of the leading CEOs because he had a long-term vision. That's how he built the Apple what it is today. So it's always good to understand the management. Number 4, margin of safety. Margin of safety is more of on the pricing of the company. So what is really the value of the company? If you look at and compare throughout the history and how the company is performing, what is PE ratio, what is their price per earning, and all that stuff. Once you understand to evaluate and value, which you can do a little bit of research, how you can find out the value of a company. Once you do that research and you understand how much really are you investing. If the company is valued, make it this very simple way to understand. If the company is valued at $100 and if the price of that company at $50 right now, that means you have a $50 of margin of safety. You are buying that company at 50% value, which is the company is right now on sale at 50%. That's like a huge advantage you can take. If everything checks out and the price is low, that's a guarantee buy. But if the company is valued at $100 but is trading at $150, that means that company is really extended, and even though everything looks good, the margin of safety is really high. So you will put it on a sideline and you wait till things correct and it gets to your margin of safety price. And prices always fluctuate up and down because so many situations in life will make the stock market go up and down. Like a few months ago, that was one of the best time to invest because of the pandemic. Everything was down 30-40%. So that would have been, if you had a companies on the list where you wanted to invest, that would have been a good time. But again, nobody knew that how quick it will bounce, even though the history was saying that it will bounce back. But still, we don't know what the next future will be. But if you are investing on a long term, it doesn't matter what right now the quick up and down movement. You can always take advantage of on a long term strategy. So that way you always invest for long term. As Warren Buffett always said, if you buy in a company plan on owning it at least for a decade, which is 10 years. So if you have that kind of attitude towards investing on any company, you will definitely do good at the end, because the longer the time you hold a company, most of the time it will go up, as long as that company meets all those four M's of investing. But if you invest with blindfolded, you don't really understand the company, you don't really know what they're doing, you don't know the management, all that stuff. There's a lot of stuff that comes up on the web, or will attract, or will look like it will, double today, it will go up and down. If you invest on those companies at the same time, there is a high risk of losing everything you have, because when a company bankrupts and they wiped out all their shares, you will lose money. So as always, do your own due diligence, make sure you invest properly, take your time, and always when you invest, you don't have to put all the money you have in one basket. Kind of break it up, so that way it will be much safer for you. If one company gets hit, it will at least while you're waiting for recovery, the other companies might help you out. As long as you're holding your portfolio, your investment for long term, most of the time you'll be okay. So as always, this is Simon again. Make sure you do your own due diligence and research and research and research before you invest. Don't go by what you hear on the internet or on the news, because sometimes those informations can be mistakenly wrong. So as always, this is Simon again. Thank you for watching. Hopefully this information helped you out. If you have any questions, leave it on a comment. As always, I'll catch you on the next video. Good day.